Hi, everyone. Thank you so much for joining us. We're going to give it a couple more minutes as we wait for other registries to join, and then we'll get started. I see a few more people joining us, so we're just going to give it a couple more minutes and we'll be ready to start. Thank you all so much for joining. Okay, well, we're going to go ahead and get started. Thank you so much for joining us today for our Krieger University September webinar covering Chapter 98 Special Classifications Provisions. Our agenda for today, we're going to go a quick overview over Krieger Worldwide, who we are, what Krieger University is, and why it's of value to you. Chapter 98 Special Classification Provisions presented by Erica Hernandez. We'll then open up a Q&A session. So if you look at your chat box, you should be able to see a Q&A section. Feel free at any time during the presentation to drop in a question that you have so we can be sure to address it at the end of our presentation. And then we do have one of our partners, Women in Trade, Women in International Trade, joining us to give us a quick overview of their organization. You may notice that today your three leading ladies are leaders in international trade. We love that organization and they may be of value to yours as well. So just a quick overview of Krieger Worldwide. We are a full-service logistics company, but we really like to think of ourselves as an extension of our partners. So yes, we handle your freight, we can book it, we can insure it, we can store it, we can help you anything A to Z. But what really makes Krieger Worldwide special is we know that the more you know, the better your supply chain is. So we've also crafted additional value-added services like Krieger University or K-Trace Technology, which is our track and trace portal, to ensure that all of our clients not only know where their cargo is, but what to do with their cargo, how to book it best, what Incoterms to use, what to do for different duty classifications or special provisions. So beyond just your full service logistics provider, we also offer Krieger University. And what this program is something that we've created where we have our freight forwarding 101 courses, courses on Incoterms, and then we do specialized training as well. So we have our border specific trainings like special classification provisions. We've done trainings for our cosmetic clients that go over MOCRA, and we can really tailor our trainings to our clients' needs. And that's what makes us special. We are nimble and really want to build your team to better enhance your supply chain. Erica Hernandez will be presenting today's Krieger University training. Erica has been with Krieger for over 20 years. She's been in the compliance sphere of Krieger for over 12 years now at the border. She has a wealth of knowledge, and you'll see through today's presentation what a value she is to our organization. We are excited to have her not only on our team, but to be in your instructor today. And with that, I'll go ahead and introduce you to our entire border team. Our border is led by Sabrina Hodgers, who's on today's webinar. She'll be assisting with our Q&A section. Sabrina has been with Krieger Worldwide since 1996. She leads our border operations with multiple offices and warehouses along the U.S.-Mexico border. You have Erica Hernandez, our border compliance manager, Juan Martinez, our border warehouse and safety and compliance manager, Angelina Malgoza, or as we like to think of her, Sabrina's right-hand woman, who helps run our border operations, and Manny Garcia, who is our border transportation and logistics manager. So when you are working with us and our border team, you are in great hands. And with that, I will turn it over to Erica to present.
Thank you, Kimberly. Good morning, everyone, and thank you for joining us today. I am very excited to be hosting our first Krieger University webinar on Chapter 98 Special Provisions. We decided to kickstart with this topic because importers are generally focused on qualifying for a free trade agreement, right? Free trade agreements are generally the most used for taking advantage of duty-free treatments. But we often forget that free trade agreements are not the only way to take advantage of duty savings. In some cases, an article may not qualify for a free trade agreement, and there is an alternative to this, and that is to make use of Chapter 98, known as Special Classification Provisions. And that is the topic of today's presentation. I believe that every member of the trade should be familiar with Chapter 98 since they afford the opportunity to save money on customs duties and fees. It is very important to mention that the use of Chapter 98 is strictly voluntary, so the importer has the right not to claim it. But it may be very beneficial depending on the operation. The use of Chapter 98 will in some cases raise red flags with CBP. Therefore, it is very important that we exercise reasonable care and be able to prove that our operation does in fact qualify. So let's jump right into it. So let's begin with the basics. Chapter 98 pertains solely to merchandise that has been exported and returned to the U.S. So this will be our first major factor in determining eligibility. We must make sure that the goods were actually exported out of the U.S., and we must be able to verify that the exportation occurred. Chapter 98 covers two main subheadings, subheading 9801 and subheading 9802. Subheading 9801 is commonly the most popular provision, the most used. It applies specifically to articles exported and returned, not advanced in value or improved in condition. The key here is the goods must be returning in the exact same manner in which they were exported, meaning the goods cannot undergo any changes abroad. A typical scenario of this would be when Mexico factory purchases raw material from the U.S. They then export the material to Mexico to be used in their manufacturing process. Once arrived in Mexico, it is inspected and found that the goods do not conform to quality specifications. So now the factory needs to return the raw material to their vendor back in the U.S. In this case, the importer may bring the goods back into the U.S. duty-free under 9801. Why? Because they were exported out of the U.S. and they are now returning without having been subjected to any changes while down in Mexico. Now, subheading 9802 applies to articles exported and returned, advanced or improved in condition abroad. So this means that with 9802, it is allowed to make alterations or improvements to the articles while in another country. A common scenario here would be when a U.S. company purchases t-shirts from Vietnam, right? They import them into the U.S. and they pay the duties. The t-shirts are then exported to Mexico for a screen printing operation and are now returning to the U.S. In this case, the importer may claim 9802 and be exempt from duty. It is very important to add that the alterations made in another country must not render a new article. So this means that no transformation process is allowed. Next slide, please. As stated in the regulations, 98010010 is applicable to products of the United States when returning after having been exported, or any other product returning within 3 years after having been exported. So let's dive deeper into what the regulation states. 9801 had been typically referred to as a U.S. good return provision. Why? Because it was only for U.S. origin goods. Only U.S. origin goods could benefit from the duty exemption. But in April of 2016, U.S. Customs changed the regulation to allow for foreign goods to also benefit from this provision, regardless of country of origin. Now, in both cases, the same requirement stands. The goods must have been previously exported out of the U.S., and they must be returning in the exact manner in which they were exported. Now, with this change in regulation in 2016, Customs included a new requirement specific only to foreign goods. And this requirement was that any foreign good claiming 9802 must be returned no later than 3 years after it was exported. So while there are no time restrictions for returning goods of U.S. origin, there is a 3-year time limit for returning foreign goods. Next slide, please. Supporting documents, very important to consider. Supporting documents are our proof that we made our due diligence and that we previously qualified our goods prior to benefiting from duty exemption. Having myself handled numerous requests for information and audits from CBP, I can confirm that these are the documents that CBP will request in case of a compliance review. In the absence of these supporting documents, CBP will invalidate our qualification for 98 special provision, and therefore duties will be owed to Customs. In addition to duties being owed, CBP may decide to go back 5 years worth of claims and impose a full-blown audit on your Customs transaction. So we want to avoid this. This may also result in large amounts of money being owed to CBP, in addition to fines and penalties. So we want to be proactive and have all of our supporting documents readily available in advance. So for U.S. manufactured goods, the key here is to prove origin, right? And how do we do this? Well, by producing a certificate of origin. Typically referred to as a CO, it is an international trade document that certifies the origin of a specific good. A CO generally contains the name and contact information of the importer, the producer, and the exporter of the goods. It also contains a description of the articles as well as their harmonized tariff codes. More importantly, it certifies the country where the goods were actually manufactured in. It must be signed by an officer of the company or someone knowledgeable of customs regulations. This is important because in my experience, I've seen many certificates of origin signed by warehouse personnel, administrative assistants, and CBP has at times returned these to me as invalid. So we have to be very careful as to who puts their signature on these documents. It is very important as well to verify that our COs are valid and up to date. Otherwise, origin will not be established. And when origin is not established, the goods are automatically considered foreign by CBP. Therefore, they will not qualify as originating. Another document accepted for proof of origin is a manufacturer's affidavit. And this is a document that is generally issued by the actual producer of the goods. It generally verifies the location, address, and dates of production. The manufacturer's affidavit can be in any desired format, and it is generally printed on company letterhead. When referring to COs and manufacturer's affidavits, let's not forget that these are law-abiding documents, meaning that any false declaration or false statement is a violation of customs law. So the certificate of origin and manufacturer's affidavit would be required only when claiming 9801 for U.S. origin goods, right? Since the goal is to prove origin. Now for foreign goods, the supporting documents are a bit different since origin is no longer a determining factor. The issue here will be the timeline. As I recently mentioned, there is a 3-year time limit imposed when foreign goods are being brought back into the U.S. So for foreign goods, what will be our backup document? That would be a shipper's export declaration, commonly known as SED. The SED will prove the article was previously exported out of the U.S. and it will confirm the date of exportation. This way, customs will be able to determine if the importer is still within the allotted time frame to return the goods under the special provision. Next slide, please. Now, Special Provision 9802 differs from 9801. The major difference is that 9801 applies to goods returning in the same form in which they were exported, and Provision 9802 allows for goods to return with some kind of advancement in value or improvement in condition. This means that the goods may be repaired, altered, processed, or otherwise changed in condition in another country. Since Special Provision 9802 may also be applied to assembly operations where only U.S. components are utilized. Under 9802, the goods will benefit from either a reduction in duty or in cases where the labor is performed in an originating territory, they will benefit from full duty exemption, meaning completely duty-free. So there are 3 main provisions for 9802. 0040 is used for articles that are returning under a warranty contract. 0050 is used for articles that are returning not pursuant to a warranty. And 0080 is used for articles assembled abroad, where only U.S. components are used in the assembly. Now, it is important to touch base on what operations are allowed under these provisions. So when customs mentions a repair, alteration, or a change in condition, it means a minor process, meaning one that does not create a new article. So going back to the scenario where we export t-shirts to Mexico for screen printing and are now coming back into the US, they're still a t-shirt, right? The screen printing process did not change the description of the good, nor did it change its harmonized tariff code. Basically, we did not create a new item, nor did it lose its identity. So going back to the substantial transformation rule, it is not allowed under 9802. Some examples of minor processes can be cleaning, painting, tightening of screws, repackaging, refurbishing, screen printing as mentioned, etc. Next slide, please. Now, supporting documents for 9802, customs regulations state that for either U.S. or foreign origin goods, 2 declarations must be completed and must be on file prior to the claim. So this is important. They must be completed, signed, and readily available before we actually make the claim to customs. The first is the owner's declaration, and this would be a declaration either by the importer of record, owner of the goods, consignee, or any agent having knowledge of the facts. Very important. If the owner or consignee is a corporation, the declaration must be signed by someone who holds power of attorney. The second declaration would be a foreign shipper declaration, and this is where they would indicate the process that was involved abroad. This one is generally completed and signed by the agent acting as the exporter of record. Now, let's talk about our commercial invoice for 9802 claims. Your invoice will look a little bit different. We mentioned that 9802 may involve a partial duty reduction or it may be fully exempt. The factor that will determine applicable duty, if any, will be the country where the alteration was performed. So if performed in a beneficiary country, for example, Mexico or Canada, the goods will be fully exempt under USMCA, meaning 100% duty-free. Now, if the alterations are performed in a non-beneficiary country, the duty will be based off the value of the repairs and or alterations. In other words, the labor cost will determine the partial duty owed. So for this reason, customs requires that your broker report 2 values. This means that a commercial invoice will have to break down the costs, right? So one reported cost would be that of the product as it is imported into Mexico. And the other value that needs to be reported will be that of the repair or alteration, so the labor cost. Therefore, it is very important that whichever party creating the commercial invoice understands that the cost breakdown should be reported for 2 values on the commercial invoice. Customs wants to see the breakdown. Next slide, please. Now, some important notes to consider prior to utilizing these special provisions, 9801 or 9802. Chapter 98, this is very important, does not apply to goods entered in bond. So this means that the goods must have been arrived in the U.S. and, if applicable, duty must have been paid. It is very common for, let's say, a Mexican factory to purchase raw material from China. They then import into Mexico while passing through the U.S., meaning under in bond. If these articles were then to later be returned to the U.S., they would not qualify for special provision because they have not been imported into the U.S. The goods only transited through the U.S., right? Another important factor to consider is that the alteration process needs to be carefully reviewed in order to determine if it fits the criteria of a minor process, as we just talked about, or if it is considered a substantial transformation. Because remember, a substantial transformation is not allowed under the special provision for 9802. And last but not least, both declarations, along with any other supporting documentation, must be kept on file for 5 years from the date of entry. And that is all. I hope this information becomes useful in the near future to all of you. Our team here at Krieger is very happy to assist with any of your operations. And now I will turn it over to Kimberly.
Thank you so much, Erica. So we're going to open it up now to our Q&A session. If anyone has any questions you'd like addressed now during the webinar, you can go ahead and drop them into the chat or the Q&A box. We'll give it about a minute to see if there are any questions. If not, our contact information is coming up. Feel free to scan the QR code or take it down, and feel free to email us or call us with additional questions that may come up down the road. So we'll just give it a little bit to see if anybody does have a question. All right. So next I'm going to go ahead and turn it over to CD and see if she can go ahead and speak. For some reason, CD, are you able to turn your microphone on? Probably not. CD is the president of WIT OC, and she's going to give us an overview, but it's not looking like I'm able to turn on her mic. So sorry.
Okay, I think we're in business.
There we go. Hi.
Hello, can you all hear me and see me okay?
Yes.
Okay, beautiful. Thank you, Erica. Thank you, Kimberly. We appreciate, our partnership with Krieger Worldwide at WIT OC. It's been many, many years of a partnership, and we've partnered with you guys on several events throughout the year that our organization puts on. So we appreciate us getting a chance to present who we are. Hello, everybody. My name is Siddhi Kara. I'm an international trade advisor for the LA SBDC as well as the World Trade Center San Diego. I'm also the president of WIT OC. We are Women in Trade. WIT OC stands for Women in International Trade Orange County. We are a nonprofit volunteer run organization, part of a larger organization called OIT, which is Organization of Women in International Trade. We're headquartered in Washington, D.C., but we have over 25 global chapters and counting all over the world that are uniting women and members in the trade community. Our Orange County chapter specifically, we've been serving the Southern California business community for 35 years. Our goal is to foster international trade and the advancement of leaders in the trade community through networking events, collaborative events, educational events like today. And, we all trade and business professionals are welcome to join us. You don't have to be a woman. We welcome everybody. And if you're not a member yet, please consider joining us. You can learn more at witoc.org. The information is listed on the slide. You can email us to learn more. In terms of what we have going on for the remainder of the year, we do have a holiday event that's going to be coming up on December 10th. Please visit our website to learn a little bit more about us, and then definitely give us a follow on LinkedIn. We update that regularly with various things that are happening in the trade community. And that is it from my end. So thank you so much for having us, and great job on the webinar.
Thank you so much. So I'm going to quickly just show again our contact information for our border offices. We do have our San Diego location and our Calexico physical offices and warehouses. We support all along the border, of course, and we have offices both on the East and West Coast and in Hong Kong. So we are available to assist you and your team any time of day, no matter where you're located. Feel free to scan the QR code. That'll direct you to a Spanish website. And then, of course, we have our US website as well. And just for everyone to know, we have our phone number. This is an email direct to our border team and their customs brokerage operating hours. Any other questions, please feel free to drop them in the chat. We're going to stick around for a minute, but feel free to come and go as you please. Thank you all so much for joining us. Thomas, I did see your question about when our next webinar is. We don't have the date for the next webinar, though we are releasing podcast episodes weekly to give you weekly insight into logistics news. That's called Cleared by the Kriegers. So feel free to check us out on both Spotify or Apple Podcasts. And if you subscribe to our newsletter, you'll receive invites to all of our webinars. And again, if your organization is interested in training, please email us. We're happy to work with you and your team to create a tailored pipeline of education to strengthen your global supply chain. Thank you all so much for joining us. Thank you, Thomas. We appreciate that. Thank you so much. Thank you, everyone.